Hey guys, what is up? Jimmy Espana here, or you may call me the Top Dot Show or the Renaissance Man. Anyway, guys, today bring you another one of my interests, hobbies, or what I do also on the side. It's Robinhood. I talking about stock options, trading stock options. We'll take a look at my account here just to show you a little bit. So today, ignore that red. Red is never normally is not a good thing, but if we go on the weekly, I have no activity this past week, so the last month I haven't done much. As you guys know, the stock market's not doing very well these last weeks, right? So I haven't touched it. About 3 months ago, you can see that I was up 2.35%. Again, this is trading stock options. In the last year, I've been up 2K, 2,600 almost, 13%. And all in all, since I've opened up my Robinhood account, I've been up 4K, and I haven't opened it that long ago. So I've been doing it for about a year, something like that. So anyway, stock options. I want to show you guys, introduce you, talk a little bit about stock options. What are they? So let's talk about Apple. All right, so we're gonna go into Apple. I like Apple. I trade stock options on Apple, and just to show you, I can actually show you my history. History right here. Where's my history? So history wise, you'll see some stock options if it ever loads. Let's see if it loads. Come on, work with me, Robinhood. All right, so it's having a little hard time investing. Let's go to investing history. Let's try that again. Again, this site Robinhood is commission free, so there is it's not that it's buggy, but whatever. I am gold, so I do pay $5 a month just to be able to have trade stuff quicker deposits. There we are. All right, so you can see here see Apple. You see Apple. I think I closed this here. This is Apple credit spread. I also do AMD, Neo, Disney. I did some time ago. Google. I started doing that recently, so you can kind of see my last activities. So let's go to the example of Apple. Okay, so we're gonna go ticker symbol Apple. So Apple is currently valued at 162 bucks. All right, so this is what I do before I get into it. So there's two routes. There is the wheel method, which I won't really get into. I'll talk to you about credit spreads today. So credit spreads on Apple. So basically, you don't need to have as much money when you do credit spreads to trade stock options. So if I look at the last week, you can kind of see that it's kind of been in the red. It hasn't really gone up too much. Dollar, I mean, 164, and the lowest that it went was one. So about $10 spread, so to speak. All right, but all in all, in this last week, from when it opened 164, it went back to 162. So it's been about $1 or two around there. So it's kind of going sideways. This is what I would consider sideways over the last month. It's been suffering. It had an all-time high, or not necessarily all-time high, but it had a high of 180. So it's been 9% down, right? So, but what I concern myself with is the calendar. Today is Thursday, the 27th of January. All right, 27th of January. So I'm I'm gonna pick a stock option that expires tomorrow, Friday. So let's do that. Because the market's bad, and I normally like to do this a week in advance. I'm only here. I'm showing you just a day. Tomorrow's Friday, expires Friday, so less than 24 hours, about a little bit over 24 hours. Um, Considering it's almost midday here Thursday. Um, I'm not going to do a live trade, but I will do another live trade with you guys. But I would show you what I would do if I were going to get into it with real money. So the last week, it's been kind of up and down. It hasn't really moved much. It's Friday. I have a theory that on Fridays the bulls come out to try to push the price back up to make up for any losses. And there's been a considerable amount of losses on Apple. So um, I have to either put a call option or a put option. So I would say that I would go with a put option, because a put option, I'm basically saying I don't think Apple is going to fall down any more than this. So if I look at here, I'm going to use this as a reference point, 154. So I'm going to look for that. That's what we call the strike price, $154. I believe that's the threshold. I don't think Apple is going to go down by tomorrow, 4 p.m. Friday Eastern time. So I'm going to go into trade. I'm not going to buy stock. I'm going to trade Apple stock. So I'm going to do a put. I said a put. So what I do is select put over here. First, I'm going to do the sell. So first, I have a sell put and then a buy put. This is what we call the credit spread. And so I said 154. So if we this is it's not going to be exactly that, but let's say so 154. So you can see here, this is the current price of Apple. So I said 154. So I'm gonna go ahead and put it's close to 154. It's actually 155. So Robinhood, since the market maker, they determine the strike price. So I would select here. So as you can see, I have a sell put, and then immediately I'm gonna put a buy put option below that. So there's a spread of $2.50. All right. And if we look here now, this shows Robinhood is showing that this is a put credit spread, and I'm gonna get a credit. So I'm gonna get a premium. I'm gonna collect premium of $36 roughly. And there is some potential for a loss, right? So the max loss that I can have is about $214, but the reward, the max profit I can get is $36. So if we bring out the calculator, all right, so if things go well, and this little the stock share price of Apple does not fall below 155 by tomorrow, basically I would if I were to enter this $37 and it costs me $250, I believe. Let me hit continue here just real quick. So I need to when I say it costs me, I can put one contract. I'm going to leave it at 36, change it to 36. So if I hit review order, collateral is, you see, this is how much money I need to have. So I'm going to earn a credit. So I immediately get that premium, $36, $37. I'm going to divide that by the total risk that I'm doing. This is how I view it, $250. So I'm going to get a return on investment of 14%, which is not bad. It's not bad for just sweating for about a day, day and a half. So I could submit this order, but I'm not going to do it because the market's been a little crazy. But basically, this is what you call a put credit spread on Apple. And this is what I do across all different stocks. One thing that I would point out so the idea is that by the time tomorrow, 4 p.m. Friday, this share price doesn't fall below 155, then that means we keep all $36 of credit that we were given, and we get our $250 collateral back at us. That's the best case scenario. There are other scenarios where this falls below, and then, like in the diagram that we saw, um, basically, remember we gave $250, and the worst case scenario would be I lose $36, so I would lose a total of $214. But you would say, hey, that's not very wise, or that's kind of risky. Well, let me show you something real quick. So let me actually go back out of here. I'm going to go back, hit the back button here, get rid of my options here. So again, we were doing a sell put, and we were looking at the 155. So look at this column right here. It says, so this is the chance of profit. So this is my chances, the probability without all these different factors related to the stock, where it is right now, the different options. Um, I have an 81%. This constantly changes depending on the movement of the price of the stock, but I have about an 81% chance that the share price is not going to fall below this. That's basically what this column says here. Now, the closer you get to the share price, the profit chance of profit, or your chance of walking away with a profit and winning the bet, if you will. People can maybe call this a bet. I'm betting that it's not going to go below 155. Um, when you do that, let's do that. Let's do the same scenario. So I'm going to go ahead and do a sell put here, and then immediately I'm going to put a buy put below it, and you can see that this time you take a greater risk, so you get a better reward. So in this case, I have the option of getting $79 and still only risking the $250, of course. Of course, so that's another alternative. But again, I'm kind of conservative when it comes to options. I try to always look for something within the range of like a 80% or greater chance of profitability, and it's been going very well for me so far. I make a little bit of side money from this doing option plays, and that's kind of what I do. Also one thing that I would do before I would even submit this, I would check for two things. Make sure that there is no earnings call for Apple coming up, and that there be no X dividend date. So what I would do here is go to X. Let's see, X dividend date. X dividend date for Apple. So we can go to X. There's a particular website I like. X dividend date. This is the I think this is street. Yeah. So X dividend date. So the next X dividend date is wow. Wait, did Apple stop paying out dividends? This is interesting. This is kind of news to me. So X dividend date. Let's see. Ooh, let's see. Close this. All right. So normally, okay. So we're in January. That's right. They paid quarterly. So every 3 months. So 12/5, December 5th, and 5th, right? That's 1 month. January. So there is no dividends this week. So I would actually enter this trade. Now let me check for one thing. Earnings. We can check for earnings by going to the Apple here on Robinhood, and we can go down to the section that is called, let's see, earnings. Let's see, earnings here. Available today after hours. Oh, okay. So in this case, and like I told you at the beginning of this video, I would not actually enter this trade because the stock market has been kind of bad this week, these past weeks. So, but what would have hold me off from even doing this is the earnings. So apparently, earnings is happening today for Apple after hours, after the bell, after the stock market in New York closes at 4 p.m. So that when there's news like that, there can be big swings in the price of that. So in that case, guys, I would avoid entering this because it could definitely go further down. And in that case, I would, that 80% chance that it says that I could potentially win, that would be, that's off the table. It wouldn't make sense. It wouldn't be. Again, I'm not saying that it would. It could shoot back up, and if it does go up, then I'm more sure that I'm going to win that, if that makes sense. So, guys, I know this is a lot of information I went through. I'm trying to keep this video on the short, but yeah, I'll make more videos if you're interested. I can kind of give you my thoughts as to how I play options, and maybe you guys want to do that as well. But this is what we call credit spreads now. Um, so credit spreads, yeah, that's the credit spreads. I did mention something about wheel strategy, and I said I wasn't going to do the wheel strategy, but let's say I was going to do the wheel strategy. So following that same example, over here it says expiring the 28th of January, which is tomorrow. I forgot you need to make sure that you select the right expiration dates. But let's say I'm still bullish, so I think it's not going to go below $155. So what I could do, if so what I could do is do a sell put. But for me to do a sell put, look at this here. So I'm going to do one contract. You see, here it's not going to let me do it because I need to have 15,500 US dollars. Oh wait, I do have that amount. Yeah, my Robinhood does have that much amount, but I'm not going to do this. I could do this hypothetically with the balance that I have right now, but basically what I'm saying is I am agreeing to pay buying 100 shares of Apple at a price of 155. Should the buyer on the other side, again, with any transaction, there's a buyer and a seller. So I'm selling. The other person, I would be forced if he wanted to execute on this option, if it's agreeable to him and it's in his advantage, which currently with the price of Apple as it is, it's not. Um, then in that case, I would have to give up my collateral of $15,500, and I would become owner. So this is another way of looking at option on stocks. Right now, Apple costs $161. But what I'm doing, since I hypothetically, let's say I really want Apple, I want to become an owner of Apple of 100 shares. Why would I pay $161 if I can get it for $155? And that's the purpose of putting up this collateral. You're coming to the buyer, I'm a seller, and I say, hey, I got collateral. I will buy Apple from you 100 shares at that price. I have the collateral to back it up. You just let me know if you want to do that. So the buyer is paying me a premium for that option to sell to me at that price. So I know the options took me like maybe a couple weeks or even a couple months to get my head around it. So what I'm trying to do in this short video is try to explain to you two methods: the credit spread and the wheel strategy. And basically, with options, um, if you're selling options, theta, this is the Greeks. Let me show you something about the Greeks. So here are the Greeks: delta, That's kind of your the chances or the probability that this would go into your favor. Gamma, I forgot what it is, but theta tells you how much this option contract decays per day, all things constant. And then there's a lot of things that are changing. The price of the share, the implied volatility. So these are the so this is something Greeks. I could get into that. I have some familiarity with that, but some hardcore option traders are really into that. What else? What else can I tell you? But yeah, this is the wheel strategy. So what could happen is, say this goes against me. It doesn't really go against me. I get the $125, as you can see there, but I get in exchange for my $15,500, I get 100 shares of Apple. And what I would do the next week is submit for next Friday a call option, a sell call option, where I basically say if the price of Apple goes up to this point, this part, then it rinse and repeats. And I know I could visualize this. I could show you guys better, but basically what I could say is, since to do a sell call, you have to have you have to be an owner, and this is what we call the wheel method. And this is why I was saying credit spreads are better. It is better and not better, but with the wheel strategy, if you're going to go outright sell a call or sell a put, you need to have a lot of collateral, or you have to have be actually the owner of the shares. So that's the wheel, but it's more safe. It's more safe. It's risk avergent. Credit spreads are more risky, but you don't need that much collateral to make options play. So I tend to like play as the seller of options. I know there are people that make huge money when they're buying options. So the buyer on the other side, if the price goes down against me, they can make a whole lot of money too. Their profit would be unlimited. On what I'm showing you here, my profit is maxed out. It's limited. So their profit can be unlimited, but they do take a risk of paying a seller, me, some premium money for something that may or may not happen. So um, I tend to try to be on the selling side. I like to collect premium weekly. But basically, that's it, guys. I'll try to make. I don't. Probably this video didn't turn out. Hopefully you're not. Hopefully you're still listening to me. But anyway, I have all this in my head, and I'm trying to explain the best way I can. On the next video, I'll show you guys. But that's what I check for: the ex dividend date, the earnings. If there's earnings, I don't touch that stock option that week. I wait until next week, until the drama's over, and that's what I do for AMD, for Microsoft, and that's kind of what I do, guys. That's kind of what I do. You have the option to close out these contracts before, meaning in this case, I get premium, but if I want to close it out, I have to do the opposite. I have to be a buyer that would close out my position. I may show you guys an example. If I go through my history, I could probably show you some examples of that. And let me see if it pops up here. So I'm going to just go back, way back at some point. So this is extending really longer than it. So let's see here. So this is a Microsoft credit spread. So here I got $18 to my favor. And I think this expired worthless. So it was just one contract on Microsoft, and I got $18 from it. And again, I have to go back. I didn't close this. I normally let this expire, but sometimes um, I've gotten, I have had to walk with my tail in between my legs. If you guys know what I mean, where it goes against me, right? You make some money, you lose some money. But overall, I've been in the positive, as you guys can see in my account over here, the last 3 months, the year. So I've pulled out some of my earnings. One thing I recommend is that when you make some earnings to a certain point, pull that out of the account and then keep that in your checking account and then reuse the money. Always use money that you're willing to give up, to lose. Always do that. So guys, that was a lot of information. That's option credit spreads. I'm going to go ahead and close this video. Thanks for paying attention. Let me know if you have any questions, and I'll see you guys on the next Jimmy Espana Renaissance Man, the top dot show NFT guy. I do all different type of things. Let me know, guys, if you enjoy these videos, if you're learning, if you want to see a specific video, maybe we have the same interest. Let me know, guys, in the video comments. I'll see you guys on the next video. Thanks and goodbye. Be blessed.